In this video, we are going to look at the Bitcoin chart and a simple indicator that I'm watching for when it's time that the bull market is going to resume and when it might be a better time to enter in the market if you're sitting on the sidelines right now or if you're looking to deploy more capital. This could be something that could help you make your own decision. What's up guys, Dirk here from intelligentcryptocurrency.com. If you are new to the channel, hit the subscribe button, click the notification bell. That way you get updated of all future videos. And if you want me to send you an email, get on my email list. It is the first link in the description down below. Simply click on that, enter your name and email, and I will send you an email every time I upload a new video. Alright guys, so what we have here is simple Bitcoin US dollar daily chart with two moving averages on it. The blue is the 50 moving average and the red is the 200 moving average. They're the simple moving average, which means that they are simply the period of the moving average divided by how much it is. So 200 moving average is the average of the last 200 days. And this is just a very simple indicator. It's available everywhere. It is also the one that people watch for death crosses and golden crosses. I've made videos about these things in the past. And if you are looking at a longer term time frames and longer term periods for investing and also using it as a guide to be able to get you in and out of Bitcoin prices, this can be a helpful tool. So let's just get rid of the 200 for now. And as you can see, this is the 50 moving average over here. It's on daily. So it takes the last 50 days and gets an average price, and that's why it lags behind. But you can see in this entire bull run from October 2020 until the very peak, it managed to stay above the 50 moving average all this time. Even this pullback to the 50. This pullback, not even to it, slightly, this pullback to the 50, and this pullback is when it broke down below. Now it had a recovery rally back to it and actually back above it. And this was then the bull trap where people thought, hey, you know, we went down below it, but we're back above it and we're going to continue the trend. And that is when we had the big sell-off. So anyone who bought over here based on this average, thinking, hey, you know, we're going to get back above it, that was the bull trap. Now you can see how this has worked also in 2017 in the previous one, although not as well. If you are looking at when it started, say for example early April over here 2017, the pullback went below it and then back above it and below it. So it wasn't as good in the early phases of the 2017 bull run. Then once things really started going, you could see on this pullback it managed to just bounce off the 50 and it stayed above it all this time with the parabolic rise up. We had a big wick sell-off back down here, slightly poked below it, back up, and again we stayed above it until the point where it broke, and then we had a huge sell-off. And for the longest period, you can see during the bear market it mostly stayed below the 50 moving average. Yeah, it poked above it over here and above it and above it. You know, these are all a little bull traps over here. People thinking, hey, it's time the bull run is going to continue. People who buy in at the top over here and then it goes lower. And they buy in over here and it goes lower. And they buy in over here and it goes lower. Now, I'm not saying that is what's going to happen. And purely as a standalone indicator, you know, it's not the best, okay? So it's not 100% reliable. You can see how much it goes above and below it all the time. But in a bull run, you can see, in hindsight, this was actually the perfect sell signal over here. Now, it wasn't quite the top, but even if you've gotten out the moment it broke it, about 55,000. Yes, Bitcoin went to about 65,000, but 55,000 when it broke it, if you would have gotten out, right now you would be in a much better position, right? And sure, it wouldn't be the exact top and it went down and went back up and maybe you would have gotten scared, because if you've gotten out the market's over here at 55 and then it would go back to 59, you're thinking, hey, you know, what if I got out the market? I need to get back in. And then you buy back in and then it drops even further. So that is tricky. Obviously, with the knowledge of hindsight, it's very easy to say, hey, this was the point when you should have gotten out. And you can see over here also it tapped below it a little bit, and over here maybe at the time a little bit below it. So as it's happening, it is a scary thing and it's not a very clear indicator. But in combination with other things, I think it is good to keep an eye on and to use as a tool. So you can see right now we are still under this 50 moving average. And until we get back above it and confirmed, you know, not just a quick little spike, I think that means we need to be more patient So if I'm looking to get into the markets, and I'm not talking about trading with leverage, and I'm not talking about trying to scalp and trying to get a $500 move or a $1,000 move or anything like that. I'm talking about the larger macro picture, the longer term move, and potentially the move back up to $100,000 or more to new highs, okay? If I want to try and catch that, it doesn't really matter a couple $1,000s higher or lower. Of course, we want to try and get the bottom, but ultimately that is not a realistic thing. So we're just looking for a decent, lower risk, higher probability entry point. So the question is, what happens at this point? And while I do suspect there is a possibility that this could be the lows over here at 30,000, and we could go straight back up from here over the next couple of weeks, I also think it is still possible that we could get a sell-off, and maybe as low as the all-time high from the 2017 top, which was roughly just under 20,000. So that would still be a big drop. And then of course, if you are looking to get into the markets and you are looking to catch the move to back to 65K or higher, 80K, 100K, who knows where it's going down the line, then obviously catching it at 30,000 or at 20,000 does make a big deal. But that is the dilemma that you face, right? If you want to enter the market. Okay, so do you get into the market at 31,000 and risk it dropping to 20,000? Or do you wait for some sort of confirmation, which means you might potentially be buying in at 35 or 36,000 versus 30,000. So obviously that all depends. Obviously you can also follow a strategy of dollar cost averaging, where it doesn't matter what the price is, you're just buying every single week. Or you divide your allocation and you buy 31,000, 30,000, 29,000, 28,000. There's all sorts of different strategies that you can follow. But coming back to the topic of this video, the 50 moving average, I think as long as we're still under this 50 moving average, I'm going to be patient and wait to see if we get a better entry point and if we do still get a sell-off or not. So at the moment, this is about $35,000. If we can manage to get back above $35,000 with a few daily closes, perhaps even a weekly candle close above that, if that is what it takes to mean that we are going back to the previous high and maybe even beyond, then it doesn't really matter too much. So I'm sacrificing guessing that this is the bottom at around 31,000 versus it going lower and potentially being able to buy 25,000, 22,000, 20,000 if we do get a sell-off versus it going up. I miss this little bit to get a confirmation that it is indeed more likely to be bullish and potentially buying in at around 35, 36,000 once the price gets above and stays above the 50 moving average once again. So in the short term, I don't know what is really going to happen. We could get a big pump. We could get back above that 50 moving average. We could get a sell-off. That's what I've been saying. Q3 likely to be sideways. There's going to be a lot of chop where it trades in this range between, we're now in between 30 and 40,000. But, it could be between 40 and 20,000. Could go sideways for a couple more weeks, a couple months. In the long term, I am still very optimistic and bullish on Bitcoin and crypto. But like I said, the short term is tricky. And when you try and time the market, it is very difficult. Very few people can successfully trade this or find the lows or catch a falling knife or anything like that. So my strategy right now is basically just to wait and see what is going to happen. As long as we're under that 50, I assume there's still downwards bearish pressure. Once we can get back above this 50 moving average, well, then things are starting to look better and we can start to prepare for more bullish price action. And you can see if I add in the 200 moving average over here, then usually what happens also, if we get back above the 50, we're likely to go as high as the 200, which is around 44, 45,000. So even if I miss this little move over here, it means I could potentially be buying it lower if we do still get a sell-off. And if I buy in at 35 or 36, well, then my target would likely be the 200 moving average, which would be around 44 or 45, which would be a pretty nice move up to that point. So for now, we're going to have to wait and see how it ends up playing out. What do you think? Is it likely that we're going to break the 50 moving average, or do you think we're going to get more of a sell-off and go into the mid to low 20,000s before resuming the uptrend? Leave a comment below with your thoughts. I would love to hear what you think. As always, guys, this is not financial advice. I'm just sharing some insights with you and some ideas of how you can use different tools like this 50 moving average and the 200 moving average to help you make better decisions on where you can and cannot enter and help you incorporate that into a better strategy. So thanks for watching, guys. Smash the like button, subscribe, like, share, and I will see you in the next video. Peace.